Yes, welcome on board. I want to believe that you really did a ton of practice on what we did in the previous lesson, mastering how to add not just the employees but adding employees compensation information. That you got really good at adding earning items, setting frequency of payment, and setting or scheduling the payroll. Now, today we're going to take those skills to the next level. I'm going to show you how to handle deductions. So let's just kick off. We are going to Derek. So I'm going to click Derek. And by the way, if you had closed this window after practicing, don't worry. All you need to do is load QuickBooks and then just come to employees. You'll be able to see all your employees here and just click one of the employees, and we're going to start with Derek. So just double click Derek, right? And we click right here and we go to payroll compensation info. We can see the information that we added for Derek on the last lesson. And today, as we dive into video lesson 5 of module 1, we're going to deal with the deductions. So how do I add deductions? You come right here. We have deduction items. These are deductions and additions. Deduction items. So I'm going to click right there and then I'll click here. We don't have any form of deductions. So to get started with deductions, so just click add new, and here we are. You can add a deduction, or you can add an addition, or you can add company contribution. Now, deductions include things like NHIF, things like NSSF, or any deductions. If you're an international student, if you are an international student, it will depend on the deductions that are done in your country. Or different countries are not the same. The different deductions for different countries. So the point is to get the fundamental of how to set up your deductions. Okay. So payroll item type, it can be addition, it could be deduction, it could be company contribution, right? If company contribution, whereby a company contributes a certain amount. Deduction is the amount that deducted from your salary. Addition, these are additions that you get on top of your normal salary. So let's handle them one by one. You're gonna start with the deduction. So I'm gonna click deduction, then I click next. Name used in the paycheck and payroll when you're reporting or indicating that deduction. Now, for example, if you are creating a deduction for employees, 401k plan, you may want to call it 401k. Now, in Kenya, we don't have 401k. This is used in countries like US, whereby a certain amount is deducted from your money and then it's matched by the employer, and that amount is capped for you. It's like the employer helps you save money. That one doesn't happen here in Kenya, so don't worry about 401k. We have this one, track expense by job. Forget about this one. We are not tracking an expense by job. Our focus is right here. So our deduction here could be NHIF, and that is National Health Insurance Fund, which is one of the deductions that the country here in Kenya is one of those deductions that employees have to do, which helps you in case you get sick. You have that card that helps you access medication. Now, in other countries could be different. So like I said before, use the one that your countries use. The names don't really matter. The point is to know this is the amount that's deducted from your salary. So in Kenya, it's National Health Insurance Fund, or what you call NHIF. So click next. Enter the name of the agency to which liability is paid. When money is deducted from you, like NHIF, it's taken to a certain company that really caters for the liability when you get sick. They're the one that will pay or compensate for your treatment. So in this case, our company is National Health Insurance Fund, which is NHIF. We don't have it in the system. Okay, so we need to first have it in the system. So we want to enter the name. If I click here, I only see 2 vendors here. Now, this company will appear as a vendor because we pay them. When we make our contribution or when money is deducted from our salary, they're the one that are paid this amount of money. All right, so they can take the liability of us when we get sick, but they don't appear here. So you're gonna have to add them, and they're going to come in as vendors. Remember, when it comes to vendors, a vendor can be a supplier, someone who supplies you with products. Also, a vendor can be someone you consult. It can be actually a consultant, someone that provides you with a service as opposed to supply you with the product. Or a vendor can be someone whom you pay and they take care of other issues like insurance, medical cover, and all that. So in this case, NHIF is going to be a vendor. So we're gonna have to add them into the system because they do not exist. So I'm gonna click add new, and this is where we enter the information. What we're gonna do here is we're going to enter the person that we deal with directly when we are making our payment. Just enter the name of someone like let's say Nora is the one in charge when you go to make your payment. So it's Nora Lita. Osungo. Opening balance now. The company is National Health Insurance Fund, NHIF, and then she's a miss. She's a Mrs. The first name is Nora, and our middle initials is Lita, so it's L, and then our last name is Osungo. All right. Contact info, our name appears, and that's it. Then phone number, let's give the code, and then phone number, let's say it's okay, so we have 724963586. that is a phone number. And then we don't have an alternative phone number. We have email with Nora. Actually, she's a domain, so it's NHIF at info.com. We don't deal with that direct. This is she's just their domain, so it's NHIF, just the domain, or whatever you deal with when you get there and you want to do your deduction. So it's NHIF at info info.com. Print check NHIF. Let's add some more information here. It's let's add the bill from address. National Insurance Fund, PO Box, and then city is Nairobi, and country is Kenya. Okay, so this National Insurance Fund or National Health Insurance Fund is a vendor, and you've entered all the details. of that vendor. We don't need any shipping. There's no shipping. Basically, the deductions are sent to this company, and Nora is the one in charge. If you have any challenge or problem with your NHIF, she's the one that you reach out to. That's why we've entered her name. The company name is NHIF, and so you click OK. There we are. So the name that will appear here is Nora, but we know this goes to NHIF. Now enter the number that identifies you to your agent. Now remember, NHIF, they give you a card which you call NHIF card. Sorry, they give you a number, okay, and that's the number that you enter here. It's the number that identify you as one of the customers. So just enter the NHIF number, which is in your employees cards. And that's why when you have employees, they ask for their NHIF number and all that, so that those details can be entered to the system. So that's the number. If you're international student, of course, every deduction that is made, you have a number that identifies you to the organization to which that deduction is paid. That's the number that you enter here. Liability account, employee paid. Yeah, this is a liability account. So the account of it is payroll liability. Okay, this money is deducted and later paid to the employee in terms of them getting services like medical cover when they are sick. So we don't need to change the account. The account seems okay. But if you want to relate this to link this to another account, you can click here and then you can link it to another account. But in this case, this payroll liabilities. Then you click next. And here we are, tax tracking. The tax tracking type determines how the payroll item appears on tax forms. Be sure to choose the correct tax form tracking type to ensure that your forms are correct. Now, this is very important. We want to know whether this amount is taxable or not. Okay, and you need to pick the right thing here. Now, if you click here, you will not see NHIF anywhere because this system doesn't have that kind of deduction included in it. So we can pick, let's see. So before we pick what to pick, let's go through this one. Are you sure you want none as the tax tracking type? Currently, none is the one that's active, meaning there is kind of payment is not taxable, it's not tracked. So let's see. None is typically used for payroll items such as net additions, deductions, or company contributions that don't affect taxes or tax forms. Okay, it means when that amount is deducted, it doesn't affect how you pay your taxes. These include items such as expense, reimbursement, miscellaneous, after tax, fees, employees' loans, charitable contribution, or that money that does not really affect the tax reports. So you want to make sure that you pick the right option here if it does affect your taxes. Let's say if you want to report this payroll item on your tax forms, choose different tax tracking type. So NHIF, it is let's see, so the option that you have here: compensation, non-taxable sick pay, other report, depending. All right, let's see. Now some of the items you see here, they don't really apply. In our country. All right, let's just pick none. Since the deduction is done, you pay taxes based on your salary group or class. So By the time these deductions are done, you've already paid your taxes, so it doesn't really affect anything. So you're gonna leave it as none, and we click next. Before I continue, it's good to know the kind of deduction that you're entering here, how it affects taxes, okay, or your taxes. Okay, is the deduction done before you are taxed, or the deduction done after you are taxed? You need to get that one clear. So as an accountant or finance professional, if you don't have that information, you can ask the company management to furnish you that information, because it's very good and very critical before you set up any deduction in your system. Okay, so in this case, I'm gonna pick none and then continue. Now what you notice, again, there are a lot of information here and a lot of stuff that really apply here in the country. So let's see what's close to NHIF. That has nothing to do with federal unemployment. This has something to do with Medicare company or Medicare employees. You can pick Medicare employee. It covers for your Medicare, and then we click next. Calculate this item based on quantity. So how is this amount calculated? We have three options here. First is calculate this item based on quantity. Select this item if you want this payroll item to be calculated based on a quantity that you enter manually on the paycheck. Okay, so if the amount of deduction done for NHIF is based on a given quantity that you enter into your paycheck manually, which means it's not systemized or standardized, then you can pick this option. Option number 2 is calculate this item based on hours. Select this item if you want this payroll item to be calculated based on the regular pay and overtime hours worked. If the amount is deducted based on your regular pay and overtime, then you need to pick this option. Now, in our case, NHIF has nothing to do with overtime. It's just a standard amount that is deducted. So this one may not be our best option, but let's continue. We will come back here and then pick the right option. Include sick and vacation pay. That one is never included in NHIF, so just leave that one. The option 3 is neither. Select this item if you want this payroll item to be based on a percentage or net or gross or flat amount per pay check. Select this item if you want this payroll item to be based on percentage. If the NHIF is paid based on a certain percentage of your salary, net salary, then you pick this option, or a certain percentage based on your gross salary, then you pick this option, or just a flat amount per paycheck. Now, of course, that tells you this one, we cannot use this one. But let's revisit this one. Calculate this item based on quantity. Select this item if you want this payroll item to be calculated based on quantity that you enter manually on the paycheck. It's standard. Okay, we pay a flat amount, so I'm gonna go with this one. We pay 500 every month, so I'm gonna go with this one, so that we set that flat amount that in every end of the month 250 is deducted for our NHIF, and then the employer contributes 250. So I'm gonna pick this amount. It's a flat amount, it's not percentage, it's a flat amount per paycheck. And the reason we didn't pick this one is your NHIF has nothing to do with your overtime pay, okay? And we didn't pick this one because you don't want to have to enter it manually on your paycheck. You want it to be part of the generated pay slip, everything indicated and tabulated. So we pick this option, and then you go next. Now, default rate. The rate you enter here will be the default rate for this item when added to the employee record. To change the rate or amount for a particular employee, enter their record directly. QuickBooks will use the number in the employee record when calculating paychecks. Enter percentage if you pay your NHIF based on percentage. Let's say if the NHIF amount is deducted 5% of your net salary or gross salary, you enter the percentage in. Okay, that's why we have enter percentage symbol after the number if this is a percentage. We have down here, if this item has an upper limit, enter it here. If you leave the limit blank or an employee's record, this limit will be used. If you leave this limit blank, the limit entered on an employee's record will be used. If you enter a limit above here and on the employee's record, the lower of the two will be used. Now, let's see which option works best here. You see the rate you enter here will be the default rate of this item when added to the employee record. To change the rate, amount, or amount for a particular employee, edit the record directly. QuickBooks will use OK. Record they are calculating paychecks. Enter percentage after the number if this is a percentage. So we just enter 250. It's not a percentage. You contribute 250, your employer contributes 250, that adds up to 500, which is deducted every month. So it's not a percentage, we don't need to enter a percentage. This one, it has nothing to, NHIF has nothing to do with the lower limits or upper limits, so we just leave this one as it is here. Okay, notice they are saying that if this item has an upper limit, okay, like there's a certain amount you can contribute beyond that, then you enter the upper limit here. Okay, if you leave this blank on employee's record, this limit will be used. If you leave this limit blank, the limit entered on an employee's record will be used. If you enter a limit, so just leave this one as it is, contribution is 250 every month, then you click finish. You can now set up, you have this one, schedule payments. You can now set up schedule payments for this payroll. When you set up schedule payment for this payroll liability, you can now track accrued amount and pay the liability to the payroll center. Just click OK. There you are. It's entered here. This amount will be deducted every month. It has a negative here. It's an NHIF deduction. It means this amount is deducted every month. Okay, so that is how you enter your deduction. Now, what I do one more, I'm gonna click here. Let's click here and add new. This time around, let's enter addition instead of deduction. Addition could be travel allowances, which is outside your salary. It could be house allowances, all that. So I want to add some addition, but before we do addition, let's do company contribution. Company contribute to your NHIF. Okay, they deduct you 250, they pay 250. So let's add company contribution here. Later I shall show you how to add additions, and then I will let you practice. So click next. This time around, I want to add company contribution. I'm going to click next. A name used in the paychecks and payroll. Enter the name for company contribution. For example, if you are creating company paid expense such as health insurance, you want to call it health insurance. This is NHIF. NHIF. You just add contributions to differentiate from what I have on the other side. NHIF contributions. And then you click next. Enter the name of the agency to the liability is paid. This one is also paid to NHIF. That's Nora. Enter the number that identifies you. Now this number should be the same number that we entered on the other end. Since I can't remember the number, just add a number, but it should be the same numbers. It's a liability expense account. Of course, these are an expense to your account. That is expense account. That's why we have an expense account here. Company paid contribution, an expense to your company. You can change this account at any time. This is an expense to your company. Okay. And we need to have it tracking all the company contributions. So click next. We picked none for the previous. The tax tracking type determines how payroll items appears on the tax form. So I'm going to pick none. We're not going to add any. And then you click next. This is also employee Medicare. And then you click next. It's a flat amount. So we'll pick neither, right? Meaning it's a flat amount per paycheck. You click next, and then the company contributes $250, okay, every month. Finish. For this one, you can now set up schedule payment for this payroll. When you set up schedule payment for your payroll liabilities, you can now track. Just click OK. There you are. So you will be deducted this amount, and your company will contribute to this amount, and then that one will total to your NHIF contribution, 500 every month. So that is how you indicate company paid contribution and deduction. Deductions means the money is deducted from your salary. Company paid contribution means the company will match or will contribute to what is already deducted from you, and increase the amount that have been deducted from your salary. That's how we have it as company contribution. So that's it. Let's do one more. We want to add addition. So click here and click new. And this time around is additions, not deductions, not deductions, and not company contribution. So I want to pick addition. Then I click next. And name used. For example, if you are creating an addition for an employee loan, you may want to call it employee loan. Let's call this one travel allowances. Okay, get travel allowances. They are not part of our salary. Okay, so we click next. Of course, it's a payroll expense to the company. These are company paid contribution. Okay, and so they are payroll expense to the company. So you click next. This, of course, is a compensation. That's why you have here compensation direct chosen. Okay, so it's not just a compensation. The tax tracking type determines how this compensation comes to you. So we have here, and this one tells you more about compensation used for taxable wages such as bonuses, awards, piecework in cash, or other payment. This tax tracking type is associated with addition. So when you have it as compensation, that means it's going to be taxable, right? So because these are additions to your salary. So you go next, and based on tax tracking type you have chosen, QuickBooks automatically selects the taxes that are almost or always affected in this. I forgot about Videro or something that doesn't apply in Kenya. Videro withholding does not apply in Kenya. Let's see. So based on the tax tracking type you have chosen, QuickBooks automatically selects the taxes that are almost always affected by this payroll. Actually, now that this one becomes part of your salary, it seems to affect everything else, just like your salary dash, social security, employee, social security, company. Just leave these ones as they are. And since we don't have any of these active, like social security and social security company, it doesn't really going to change anything. Okay, so just click next. Calculate this item based on quantity. You're given a flat amount. If it's allowance, it's flat amount every month. So we don't need this and we don't need this. We just go with this. Select this item. Let's check the first option here. Calculate this item based on quantity. Select this item if you want this payroll item to be calculated based on quantity that you enter manually. Your allowances, they are constant. It's a set amount. You don't enter them manually. You want them to be automated the system that this is the amount that I get for my allowance every month. So we don't need this option because we're not going to be entering them manually. You want them to be automated and calculated every month. Calculate this item. Option 2, calculate this item based on hours. Your allowances has nothing to do with hours. So you click neither. It's a flat amount. So we go with that option. And then next. Let's say your allowances is just 10,000. Okay. And that's it. You're given 10,000 every month as your house allowances or travel allowances. That's it. That's all you need to enter there. And then finish. And so this will become part of your salary. Okay, they are additions that you get. So that is how you set additions and deductions and company paid contribution. So once you have that one set up, you now have your payroll information set up correctly. Okay, and this is just for Derek. You also need to set this or another one for the other employee and the other employee. So you click OK, and we are done, right? So now we can do one more, and then I'm gonna leave you to practice. Okay, so let's go to Laura. I'll click Laura. We want to set deduction for Laura, so click Laura and actually double click Laura to open the employee details. Let's come right here and click payroll compensation info. I'll just need to click here. I'll click here and pick one of the items like NHIF. Because we have it set, it will just come automatically. I'll click here and then pick contributions. Now Laura, she doesn't receive any travel allowances, so I'm not going to include travel allowances because she doesn't receive any travel allowances. So just click OK, and there you are. We're done with Laura. So you pick the deduction or the addition or the company contribution or company paid contribution that affect that specific employee. Not all employees are given allowances. If employee is not given allowance, you don't pick allowance. If employee allowance is different, like if I pick Rachel and I double click to open Rachel and edit his or her payment info. So when I come to payment info, compensation, NHIF is standard. Their deductions, company contribution is standard. She does get allowances, but notice she works overtime. So basically, probably she doesn't have, sorry. Okay. Let's say that Rachel doesn't really get any And allowances because she's paid hourly rates, rather she's paid hourly overtime, like she's a casual, so she may not have allowances, so I don't have to include allowances here. So not everything that you're going to set for the deductions, the additions that are going to apply for every single employee. It will depend. If it does apply to that employee, you indicate it. If it doesn't apply, you leave it. So all that's going to happen with Rachel is just deductions, okay? Because she's paid in hourly overtime. So I'm going to cancel this, that it don't affect anything here. Come back again to Laura. I'll go to payroll compensation info. She's paid commissions. So again, she does not have allowances because she's paid on commissions. But maybe she gets some bonuses which might come in as addition. So what do? Let's say if she gets some bonuses, I can click here and the earned bonuses here. So you can go to add and then add some bonuses for this specific employee. So you can go to add and then you click next, and addition type I can just enter sorry, not bonuses, but let's say she gets some house allowances. I can just type in here house allowances, assuming the house allowances is slightly different from travel allowances. So you can have house cancel. Let's cancel this. She's a salesperson, so she most likely gets travel allowances to move around when she's doing sales and market. So I'm gonna click here and pick travel allowances for her. But the travel allowances amount is not, she's not given 10k, she's just given 5k for her traveling allowances. That's the amount she's given. So I'm gonna enter that amount right there because she gets different amount. Then I click OK. So our travel allowance is different. So let's go back to Derek and let's see whether the travel allowance for Derek remains as 10,000 because we know Derek is an executive. Double click here. We go to info payroll compensation. Notice his travel allowance remains as 10,000. Okay. Even though we changed the traveling allowances for Rachel. So click OK. Let's confirm whether it's Rachel or Laura. Let's see. Yeah, for Laura, the travel allowance remains 5,000. So once you set up the deduction, they'll be there, but you can vary this amount. Laura gets travel allowances, but it's 5k. She's a salesperson. She receives sales commission. Okay. Now, Derek, he is an executive. So if I go to payroll compensation, he gets travel allowance, but his is 10k because he's an executive. He travels a lot. His salary is also high. Okay, so you click OK. So the point here is different deductions and additions and company contribution, company contributions, they are going to be different for different employees at different levels. So you need to have and to know the level of that employee and what that employee gets. The amount will vary for different employees. That's very, very important. You want to make sure that you have the accurate information so that you don't have complaints once you have released the payroll, and when employees receive their pay slips, they don't come back complaining to you because you don't have the system set right. So that's how you set up deductions. What I want you to do now is I want you to follow along on what you've done and make sure you complete setting up those deductions for Laura and Derek. And then I want you to go ahead and set up deductions for Rachel. We didn't set up anything for Rachel. If I click Rachel twice, we go to payroll. There's nothing here. The only thing we set up for her is the hour rate. There are no deductions. So I want you to set up deductions for Rachel, and then remember the two more employees you added in the previous lesson. I want you to go to those employees and set up deductions for those employees. Make sure all the deductions are set for those employees, and earning items are set for those employees. Practice, 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 and make sure you get good at this. In the next video lesson, we're going to be dealing with employees. I've shown you how to enter employees, how to enter earning items, and how to do deductions. We're going to be dealing with something different. For now, I want you to really get good at working and handling employee compensation. And then in the next lesson, we're going to pick from where we left off. Then I'm going to show you what we are going to be handling. For now, add deductions and earning items for the new employees that you added, and then add deductions for this employee Rachel, because we added any deductions, additions, and company contribution. Get good at what you've done. That's your practical exercise before we meet in the next lesson. Until then, practice, 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 and I'll see you in the next lesson.